Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just ticked 1 minute past midday here, making it just gone midday UTC as well. Let me just get some screen up for you guys here. Lots of awesome, but very busy things going on at the moment, getting everything organised for Congress. So let's have a look. I want to just throw us straight into some of this taking a nice look back on what we've been discussing. But first of all, a very, very big welcome to everybody on there as well. Hans, absolutely brilliant and beautiful to see you back on the stream, my friend. We've missed you and our lovely Kelly as well. So Kelly's still AWOL. We we obviously wish her just the absolute best in the world. Hopefully she's having a lovely holiday. But Gio, it's lovely to see you in here as well, my friend. Just welcome to everybody that's tuned in today. I'm not sure how many people are going to get on here today. I'm not sure how many people can stand 3 days in a row of listening to me ramble on about stuff. But if you are in here, you are very, very welcome. And what I want to do today is just take a very quick look over the setups that we discussed on Monday, because I had some lovely messages from some of you that got involved in the anchor short. That was a really, really nice play in the end. I think we booked around about, 4R on that, I think, by the time we kind of took some profit. So that was quite a nice setup. Simon, hello, mate. Hello, Balls. And Bernd. Oh, Erica's in there as well. Hey, Erica. Lovely, lovely, lovely to see you all. So I just wanted to start. I want to keep this a little bit shorter. I say this every stream. I don't think I've kept it below an hour for ages, but hopefully it is of value to everybody. But I quite like this. I quite like this dynamic where we're kind of on here every day. It kind of gives us a little bit of accountability and just allows us to, just look at these setups, how they play out in kind of real time, right? It's very, very difficult to kind of pick times of day that you can actually look to trigger setups without being a little bit blasé and moving down to really kind of low time frames, which some people do incredibly well. But for me, I do still really like executing on a 5 minute. So hopefully this brings a little bit of realism to it. And it's really lovely to see some of you guys taking this stuff on board as well and executing with it. And not even just with live accounts, guys. Just whether you're doing it, just ignore people with the thing. Just do it on test accounts. Don't cost yourself money until you've really, really got it really, really well set up. All right. And you've got it set in your mind. And then do it with really small amounts of money and just look to build it up naturally. All right. Waffle over. Moral's in with us as well, mate. Not bad today, fella. I think maybe 8th or 9th in the room. Moral smashed it yesterday, first one in, which was awesome to see him in there. He's like, first one here, loved it. So, what are we looking at here? And let's just take a quick look back on what had us, I always come under fire from being bearish, even from people, my fellow traders at the Nest, who are like, how the hell are you posting short trades at the moment? The market's crazy bullish, etc., etc. Of course it's crazy bullish, but I'll post long trade setups from where I get my triggers from, and I'll post short setups from where I get my triggers from. Am I always right? No, I'm right enough, right? They just need to be right enough. I don't even want to use the term right. It's profitable, right? Let's not kind of go over that old business of being right and wrong. Oh, whack, my man. Good to see you. Third night in a row. Absolutely, you absolute soldier. So what I've done on here is we've got our consolidations, right? Our down closed candles. The expectation is that our down closed candles are supporting price. So why the heck were we short from up here? Well, what we did was we took out this high here, yeah? And we also took out this cluster of highs here, these kind of relative equal highs. So for me, this was a really, really good opportunity to see price chill out, come back, yeah, test into here, and then go up. So that was the thoughts on the daily scale, right? Now, obviously, our expectation is for price to travel from external to internal liquidity, right? What we can see here, and we were covering this off here, right? Look, so external to internal, violated internal. Let me zoom in a bit. Violated internal. So our bias then is expectation for it to run to external. Yeah. Takes external, where to? Back to internal in here, right? And if we want to measure that up using our premium discount ranges, what we do is we just overlay that there. And then our high probability setups come from the green. Yeah. So we're fine. We've got our array. Excuse me. But what we want to see is the move catalyze within here. Yeah. So if we get our trigger and we enter it, that's fine. But we want to see price, drive down into that to give us our high probability plays. Then we're moving from external back to internal, to external to internal, external. back to internal. We do violate this, but we don't close below, right? Which then means that we've just taken external. So where's our expectation? Price to go back to internal, internal, external, external. And this is something that I kicked myself with the other day. I really wanted to show you guys this because I love an inverse fair value gap, right? So at this point, when price comes here, right? So external liquidity taken here below this low to internal liquidity here, right? Which is this order block. Price then comes back down to take external liquidity, yeah? All the way down, sets this fair value gap. So external to internal. But when we get here, what do? We close above it, right? That then makes this an inverse fair value gap, the same as our one back here, and then provides our base. Our expectation now is for price to take out this higher. External, back to internal, where we form this base, back to external, right? This whole section here, basically from August all the way through to October, just provided just such beautiful bias. Now, 2P, GG, welcome, my friend. Is that a really awesomely funky dog that you've got on there? I love that. That looks so cool, that logo. It's like a Frenchie, isn't it, I think? I've got some friends with Frenchies that would absolutely love that. So, before I digress and start talking about dogs, now we're moving into really, really bullish price action. And the issue here is that sometimes it's really, really difficult, right, to have that same conviction that we have here because we're looking for price to go from external. So when price runs external here, runs really, 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 really hot, we want to see it come back down into internal. But if we look here with our dealing range, right, we just don't quite come down into it, right? Nor is there an array here, which isn't a problem because we can look at that on a lower time frame, or we can look back across to here and see if there's any mitigation blocks or anything. In this case, there isn't, right? But you see what I mean? All of a sudden, we're then in a place where price is actually just looking at this from a structure point of view, being supported by these down closed candles, right? So down closed candle here, support price. Right, and it looks messy because it looks like you're overlaying it, and people are just like, yeah, but you can draw these everywhere. But it's just simply not true, right? Those down closed candles, when price expands above it, this is used to support. Price goes back up again, forms these down closed candles. Price is now digging into this for support, right? So I put a post out on Twitter. I don't know if anybody saw it with the anchor trade, right? So I'm going to do this, take it down there early, and then I said from here, let's look at the live stream tomorrow and see if we get the expansion, right? So I had a few messages. People say, well, hang on, you just posted a short setup on Anchor. So, surely we're going lower. It's like, well, it's all about first of all, framing the trade and then your execution of the trade, right? You don't want to fade moves like this. Yes, we're coming into a key level here, right? That's just an SR level, right? I know a lot of people, as I said, I'm a hybrid of different traders. A lot of my stuff comes from ICT, a lot of stuff from SC. Very, very fortunate to have been able to study those guys really, really intimately, right? But for me, it's still the same kind of framing, right? Where's price delivering from? This order block, right? But when price ran this key high, and we look back to the left, as we said before, then the expectation is for price to just go from external, we've taken this higher, to internal, yeah? So that's how we framed it. So yesterday, as we can see on here, this was the trade. Now, let me just zoom in a little bit more. I've left this on here just to show you that, excuse me, with the expectation for price to dig into this and move away from it, we still want to see some kind of liquidity taken, right? Which is why I labeled up these two lows, right? It can be aggressive and it can take it off of this one or purge a little bit deeper down into this one. So all we do is we just monitor and we wait for the setup. If it hits this one and we don't get that 5-minute displacement, we expect it to go lower, right? It didn't, and we did get this move up, but unfortunately we couldn't catch it. It was like an absolute rocket, all right? But just to kind of frame this on our hourly, price comes up, takes this higher, right? So then during Asia, price comes down, forms this consolidation. In London, yeah, and we can see here again, look at the wicks. Wicks on candles can often tell you so much. Look at these upside wicks here. You can just see prices trying to get higher. It's just getting absorbed. Then finally, price kind of gives up and it drops and it gives us our inefficiency, which is our hourly fair value gap. So once this candle's closed here, that fair value gap becomes valid. Where are we here? We are 11 o'clock in the morning. Perfect. We formed that during London. I love to trade the New York AM session. So when we get into here, this is when I'm looking to be really interested. Now, I labeled up on the live stream for anybody that was there 2 sets of highs on the lower time frame. This little black line here and this red line. And I said, I want to see the red line swept. I had a few people message and say, why did you want to see the red line swept when we taken relative equal highs here, right? So this is where you always want to zoom out and make sure you've got your high time frame bias, yeah? Because a lot of people would have got in on this. Yeah, see this black line here? Equal highs, price comes up in our New York session, we're short bias, and then we get displacement lower, right? So people are like, well, why wouldn't you get in on that move? Well, for me, when we zoom back out to our hourly, that's not a high. Yeah, this is a high because it's flanked by 2 lower highs, right? So for me, when I'm thinking about this and I'm thinking about institutional buyers, institutional order flow, where's the money stepping into the market? Well, it's mostly high time frame. So for me, I like to pick these daily highs and lows, obviously, as you know, in terms of your bias, but the hourly, in my mind, it just makes a lot more sense that they're what are going to get run. Yeah. So key high here as well. Why? 2 lower highs flanking it. That's the one that gets run here before price then comes back down, right? Same here with this hourly here, right? This hourly here, right? That's why we labeled up this one as well. So sometimes kind of zooming out for that view can really, really help with lower time frame execution. And then quite simply, we always wait for our pattern, right? We want to see that sweep. Which we got here, which was just beautiful. We then take out this intermediate term low, yeah, which was when we had our market structure shift. We then return to this fair value gap. And actually, I got a little bit, not cocky with this, but I really like this inverse model at the moment, right? So this inverse fair value gap that came across to here, when sorry, I can't stop the bloody thing putting that on, but inverse fair value gap, yeah, this fair value gap that goes through it, the bearish one, yeah, let me move the cursor out of the way, that then makes a balanced price range, all right? So as price drives up into this here, we then see that it holds, and that's where we were able to get our short triggers from. Now, my original target, if you remember from the stream, are these equal lows, right? So I always want to see at least a 1.5R. Sometimes I will push it a little bit if I'm very high conviction, but what happens when I get to 1.5R is I move my stops to entry. Yeah. And then that way it allows me to de-risk. I can forget about the trade. I can set secondary targets, which are here, even lower if I want to. And then that was it. I think it got to just short of 5R actually. What was it? 4.5 to there. Yeah, it got to about 4.8, which was fine. I think we were in and around 4, just under by the time you kind of take some profit on the way down. For example, we got into this, drew into this. This was really nice because this was respected. Again, we want to see up close candles defend price on the way down. Yeah. And on the way up, we want to see our down close candles support price. That's a really, really good way to think about it. Django Blue, hello, my friend. It's actually BC Richfield here, one of very, very fortunate to work alongside the wonderful Crypto Burb, but not his beautiful Polish dulcet tones, unfortunately, just my gritty East London stroke Essex voice for you today. But you are very, very welcome to the stream. I think you've been on here before, my friend. Please don't hesitate to ask any questions, as with anybody else that's listening today. We have a fantastic group here as well who are all very, very focused on education. So, there aren't any silly questions, right? Well, there are, as we all know, but not when it comes to that. So please don't hesitate, guys. So that was the theory there. And then it's all about flipping bullish here if we get the setups, right? And we just didn't get it. Look, prices really, really ran hot here. But again, why was the expectation for New York PM to be the move higher? Because when we just zoom out, we first go to our hourly. We've taken this key liquidity, right? And again, we're just overlaying the same things on different time frames, right? So what's our expectation here? Remember what I'm always rattling on about? What I'll do is actually, let me highlight. See if we can highlight that for a minute. And then pop this in a group and we'll just... From the live show yesterday, which was the 7th, wasn't it? Just to clean that up a bit, right? So what we're looking for, guys, we're looking for external to internal, right? External liquidity being our highs and lows, and internal liquidity being our fair value gaps. Internal can also be order blocks, right, and mitigation. But for me, I'm always looking at price either drawing to rebalance an inefficiency, which is a fair value gap, or gravitating towards liquidity above an old high and low. Hey, Julian, no worries, my man. No worries at all. You have been here for the full wrap, and you know me, the first 10 minutes is normally just absolute drivel anyway. So you've actually come into the meat and the bones. We just looked at that anchor setup that I know you were on the stream for on Monday, worked really well. That's not why we're looking at it. I'm just trying to kind of do some streams this week, especially because I'm thinking about trying to continue this moving forward, actually, but just maybe doing shorter sessions. I know at the Nest we're going to bring in live trading shows where we're going to have 2 traders every day trading different sessions, which is going to be really cool. But I just feel like it gives a nice bit of accountability for some of the education material we do on here, rather than kind of just saying, oh yeah, let's look back at this previous date and bang, we're on. Awesome. So now we're on the hourly. We're looking for external to internal, right? So this is where we had our short, was in this fair value gap here. So just to reaffirm that, just so everybody can see it. This grey box, can you guys see that all right? Yeah. This was the fair value gap where we triggered our short. Why? Because we've taken external liquidity here in the form of this low. Price has rebalanced internal liquidity, and our expectation is for it to then chase down external. But this is our first external liquidity here, right? So that's fine. It's run that. It's complete down. Now it goes into... it is, I forget how British some of my terms are sometimes, Yargo. It's good to see you on here as well, buddy. So just going to pop that away and hide that again, right? So external, internal, external, fair value gaps, highs and lows, right? Is that just, hopefully that's really clear for anyone. If it's not, do let me know, yeah? So we're just overlaying this from a daily to an hourly to a 5 minute. Now, remember what I said. When do we think that price is then changing the state of delivery, right? So let's use this as our external, yeah? So we're going to label this up here as well, because that is absolutely right. Let's do that a bit thicker. So that's external. Our thick red lines here will act as external liquidity. Let's draw that on here. And let's just hide that one for now because we don't need that. So external liquidity is taken here. Purges down, takes another external liquidity. That's fine because we're just saying what's it taken. Hannah, H, lovely to see you on the stream again, mate. I hope you've been doing really well. So external liquidity. What's our expectation from here is that price is going to move to internal liquidity, right? We're just going to draw this across to here. Do that a bit darker so it stands out, okay? So when this candle closes, it forms this fair value gap, right? Price then runs this low, which would immediately, in my mind anyway, I'm then looking for long setups here. Why? Because we've taken external liquidity. Do we have an internal liquidity draw? Absolutely. Immediately this FVG, right? Some of you think, but you can't get a trade in there. And you absolutely blooming can. Right, if we triggered, even if it was from, say, here to here, what have you got? You've got, 1.4. Even to the equilibrium of this, it's like 1.36%, right? And that's just taking it from there. So you've got the chance for price to come down here, reverse, and go up. Ultimately, it just absolutely flew and didn't give us any entries. But that's fine, because what do we then say to ourselves, right? What's happened here? We violated this. So we've broken our set of rules, right? We're no longer traveling. So internal, external to internal, or hang on, internal just kept going. So the beauty of this is when we're in from down here, just for argument's sake, let's say we're in from here, right? And our target is this, right? And in truth, you would need this would be done on a lower time frame. I'd want to see at least a 1.5 hour here, right? That's my initial trade concept, is we run this, we get a low time frame reversal pattern, we trade it up to this fair value gap. However, if it keeps going, when we get to 1.5 hour, we move our stops to entry, right? If the thing keeps going, you're just monitoring it on the lower time frame, following it higher and higher and higher, right? Always looking to defend your principles, right? So then with here, you can take some profit here, but there's no real point moving your stops. I normally leave like a low percentage, even if it's 10, 15, 20% of the trade for a runner. Because if you'd done that and you got up this morning, you'd been like, oh shit, that's gone to 6R now. I've got 20% of the trade in there. It's made me almost as much as the initial move, right? But I digress. This isn't really one based on risk management, but it is probably arguably the most important factor of trading. So this is the moment, right? We violated here and we took external liquidity. Now, if we'd violated this candle, yeah, but the candle had stopped here, right? Then my expectation is for it to draw to that high, because this is now an inverse fair value gap, and we expect this to act as support, right? It didn't. That continued up and took the high. No problem. If I was trading this in Asia, and if I was trading it this morning in London, which I wish I was, although I don't think we would have got in, then back to our principles. No, I sound like a broken record, right? But what are we always looking to do? We're going from internal to external until it breaks, right? So external liquidity, which is our high, we could then look, if we wanted to, and we also rebalancing this fair value gap, right? We also take that out, which is an intermediate term high, because it's rebalancing because it's formed in a fair value gap, meaning that when we break this, the chances are price is seeking liquidity higher. Yeah. Now, I'll do a whole different episode, or actually go and check out ICT. I always recommend going to the core content for this. You're looking for your support, resistance, you're looking how to things like that, price action, movement, dynamics. SZ is just unbelievable. ICT will give you all the core foundations in this in terms of your fair value gaps, how the price is moving, how you want to take high probability trades. So I'm happy to teach you what I know and how I apply it. But again, I'm not the creator of this material. It's just material from different people that I've kind of hashed together over a number of years into different trading systems that have worked for me. So inverse fair value gap. Yeah. Because it's violated, we now expect this to become support, but it doesn't change our strategy, right? We've taken external liquidity, so the expectation now is for price to come back down, yeah, into this fair value gap. We can add our premium discount range because we've taken a low here and we've taken a high, so this is a dealing range, right? And we can see we just nibble into it here, right? See that? The line, the nose that just comes down below into here, that's then engaging a buy program. We get this consolidation. Yeah, so think of it like a refueling ready for price to just rip. Yeah. So when we look at this here, we're just going to dive onto the lower time frame. All we're saying to ourselves at this moment is when price comes into here, yeah, I respect my kill zones, right? Again, this is up to you to test when and where you want to trade in terms of the ability of time and price, yeah. But then I'm targeting this higher. I'm targeting this higher because it's the clear and obvious external liquidity, right? Now, remember I said about this inverse fair value gap here and how important these can be, because when we've closed through them, it gives us the indication that that's not doing what it's supposed to do. If price was going to reprice here, our expectation is for it to come lower to take out this. It didn't. It came higher, but it did take external. Now, what we have here, just to show you as an example, is another inverse fair value gap. So once again, when this fair value gap was created, we've got our high time frame bias here, right? So all we're saying to ourselves is, great, we're rebalancing this. So we've come to internal, yeah? Now we're looking to go to external. So we don't pay this too much mind. Our expectation is still for price to come through this. But if we wanted extra conviction, yeah, when this is violated and becomes an inverse fair value gap that we get here, see as it closes above, right? See this one, remember when I drew that black line on there, I said, look, if it had closed below it, my expectation is for it to chase down this high, but it already taken that high, right? When this one happened at the beginning of London this morning and closed here, when we move on to the 7 a.m. candle, expectation is for price to pop and take out this, yeah? Now we've done that, what have we done? We've taken external liquidity. Where's price now heading? For internal liquidity, right? So let's just pop this on here. Right, that's external liquidity here. But what I'm really interested in here is taking out these equal highs as well. Yeah, equal highs. Price has run those. It's then had an hourly sweep here, which we'll just mark on a slightly smaller. So now we can say to ourselves, okay, if we drop onto a lower time frame, again, I wouldn't take this trade at the moment because it's just outside of my kill zone, only for a few minutes. But I would be looking for this sweep, yeah? And then I'd like to see price correct back down to here. This is also a really key SR level, right? So if we're looking at that, we've got these kind of factors that are saying, okay, price is drawing down to rebalance this. Why? External liquidity back to internal liquidity, right? And then from there, we're looking for price to potentially move higher. However, if we violate this, we close below, Yeah. Then we can start to say, okay, actually, we're probably coming back down to take these lows here. So let's see what that looks like. Yeah, just unfortunate, really, I suppose, that we didn't get that. See, for me, I really don't like trading outside of these kill zones, right? It's always been the same, and I often really trade London, especially with cryptocurrency, okay? But we can see here, yeah, this is that high that I said about those equal highs. We get this initial reaction, not enough to trade off of that, right? We haven't had an internal sweep, and we certainly haven't had any displacement in the leg down. People who try and get into these too early often find themselves victims of this secondary sweep, right? So when we're doing this, my target's down here, remember? Yeah, the price is coming down towards this fair value gap. And my expectation is still for this to draw lower. But because this is a counter trend trade, right? Meaning that our high time frame bias is obviously bullish. We're just expecting a corrective move lower, right? What I'd be looking for here are these internal targets. So I'm looking at this, and I'm saying, okay, there's a low there. Let's do that so it stands out a bit more, and we'll do these as dotted lines. Where else could price reverse here? Well, okay, we do have a low here as well. Yeah. People will be like, oh, well, you're kind of taking too many lows into consideration. It's like, well, no, I don't know where it's going to reverse. What I want to know is, can I be a seller in here? Yeah. And if so, can I get involved? Do I have the risk to reward that I need? Because I don't know if price is going to reverse here. It might reverse here, right? All I know, and if we just draw this across to here, is as we look at this, price is coming up. That, for me, is a very obvious displacement down. High volume candle. What does it do? Clears out these lows here. That's actually the lower. Then what are we looking for? Price to come back up into our fair value gap here. So that's where we're a seller. But before we enter this trade and before we have this development here, we need to know if our entry's here, right? And this is a tricky one where you want to be aggressive with your stop or not, right? Technically, that's your swing high, right? So you want to go above there, probably even a few points above there as well. And then you're saying to yourself, okay, do you have the risk to reward that you need to get down to this first point here? There's a 1.28. So then you've got to come to the decision of, okay, what else should be defending price here? And do we feel like price is going to run much higher? You can look for the bodies of the candles, right? But don't go forcing that onto the market, right? For me, I'm actually a very, very risk averse trader, and especially with crypto, because crypto does have this habit of it is a bit illiquid and it can come and run these stops. So for me, I'm saying, okay, well, what's the risk in this trade? Yeah. So I would want to know that realistically, if price gets to here, then I'm moving my stops to entry. Yeah. So that would look like this at the moment. If we come up and we take this out, I'm out of the trade at break even. Would I take profit on 1.35R? Probably not. Probably just enough to cover my fees. Yeah, because you need to remember the percentage of this, right? That's a 0.68% stop loss. You're running down to a 0.92 target. So your margin on that is going to be not insignificant. So you could face, it depends what your risk is. If your risk is $20, if you lose this, you could be facing an extra $3 to $5 in fees, right? Because of your position size. So one thing you can do, Congress is coming up. This is a bit of a hack, but if you get yourself onto the Congress list, members of the Bird Nest, you get immediate access for us for the whole of Congress. You get to come in, you get all of our trade calls, you get to be part of the Discord, the exclusive Nest Club, etc. What you can do in that time is, first of all, work out if it's something that you get a lot of value for and you would like to join and become a member. Or you can go in there, absolutely enjoy everything that you can, be part of the giveaways, enjoy all the alpha that's going from all the other people that we're getting onto the show, but you also get cheeky little bit of access to things like this, which is a trader I'm very fortunate to work alongside and someone that's become a good friend of mine called Razoon, fellow trader at the Bird Nest, made this lovely position size calculator. So my first line goes on my entry, second line goes on my stop loss, third line goes on my target. And then down here, I get this nice little black box that tells me everything that I need to know. Yeah. So if my risk is set at $20, yeah, so based on $1,000 account, risk percentage is 2%, leverage is 10. Leverage just affects your margin. So look, your margin's $297, but your position size is $2,974 because you're borrowing that money from the market, right? Or not from the market, from the broker. That's what the leverage does. If I put my leverage down to 1, then you'll notice that these two align. Yeah, it's 29.74, 29.74, both, right? So that's, when you're looking at leverage, just always factor that in. But you are going to get charged you're going to get charged your fees based on the position size. Yeah, so it's a small percentage of that $2,974.18. The reason I'm bringing that up, and if anybody's really confused by this, I'll try and put a session together on it, is because it's so important when you're day trading. Yeah, because if you're working with too smaller margins, your fees can get really, really big, right? And then if you do get any slippage, bits and pieces like that, obviously it can really, really start mounting up, which overall affects your risk to reward, which is what you need to factor in for in terms of becoming a profitable trader. All right. Now the chat is just absolutely silent, which, as we've said before, is either people are feeling lost, or maybe people have just got bored of me after 3 days, or people are just making notes and they're kind of, if you have questions, guys, please do let us know, right? Or if this is unclear, let me know, and I'll try and make it clearer. Now, in terms of managing this trade, yeah, what would keep me in here? So I can just look at the same principles, right? External liquidity, price coming down into internal liquidity, right? External, internal, external, internal. Awesome, awesome, Julian. Good to hear, mate. The other thing I'm doing is I'm looking for, because we're in a sell program, we're looking for lower prices. What we're looking for are up close candles, yeah, to defend price lower. So as we look at this, the same way that when we're bullish, we're looking for the down close candles to defend price. I'd say one of the big things that you can look for here are, well, two things, right? Look for these up close candles. So let me just move this out of the way here for a second. Auto jam, awesome. Sponge away, my friend, sponge away. Right, so we move up here. We can see this is where we take this higher, and again, a little bit broken record time for you, but we take this higher, we inverse this fair value gap here. Look how the bodies respect that. It's crazy, actually, especially in crypto, to have this clean a price delivery. Taking the higher, expectation is then for price to where? Come back down, internal liquidity. What do? Violate it because we close below it here, right? We leave this intermediate term low intact, which forms equal lows, which is then the target for price to push down onto. So, as we see this here, what then happens? Once we take these lows here, price leaves this up close candle here. These up close candles are kind of within that. So I would take these and I would say, right, well, I expect these, yeah, or this kind of cluster of candles here to defend price. Yeah, so I expect this to keep price driving lower. Now, we can see what happened here. Internal, external, yeah? So when price ran this low, external is coming back to internal, which is this fair value gap, but also this one here as well. And I think if we look at the highs here, did this one just dig into it? What's that? 0.02500. The high for that is 0.2500. So they're kind of equal, really. So price could run a little bit higher into this FVG here, in which case then I'd kind of be making allowance for the low of this up close candle, yeah, because that's relevant. That becomes relevant as soon as we close below it, right? And I'm saying to myself, okay, here, I want to see this defend price right now, yeah, if we're looking for this to drive lower. Truth is, we just started the New York session here, right? What we can see here is we could be taking this as a sweep or that as a sweep on liquidity. And now the buyers could be stepping in New York. Yeah. Thanks, Yaga. It is nice to know you enjoy the absolute drivel. It's always reassuring, mate. So does that make sense to everyone in terms of what we're doing daily at the moment? So now we can learn so much from this because now we can monitor these trades. It takes a lot of the anxiety out. It says to us, okay, this should be defending price. Am I really concerned if price is coming in? And you know what? We can probably refine this down now to this candle here. Right. Now, again, the lower the time frame, you don't want to end up getting yourself running all over the place. This could very easily violate this, come up into this larger order block here, yeah, before coming lower. But for me, am I that interested in making 1.35R? Yeah, I mean, you can build a hell of a career taking 1.35Rs, but I want to see that deeper corrective move into here because, again, let's not get lost listening into like always, Whack. Like always, mate. Yeah, let's not lose our higher time frame vision here. We've taken external liquidity. Our expectation is for now to take internal liquidity. If I'm wrong here, this thing moons, it takes me out, I haven't lost anything, right? But at the same time, if I hold this, right, and let's just take a look at this here, what have we got? That's the sweep on price, isn't it? Yeah, that was the low. So if we're looking at this as our expansion, then we can actually see that our green line here, which sits basically perfectly at the equilibrium of the fair value gap, makes a really, really nice target here. So if we're looking at that green line, then I've got a 2.65R trade, right? So I don't want to be getting myself out of these positions too quickly. And you could say now, well, yeah, the market can open super bullish. The momentum can absolutely take this out, which it looks like it wants to do. But we just have to wait and see. At the moment, for me, I've taken my money off the table. If this thing stops me out with slippage, I've made enough to cover my fees. I don't lose anything today, right? If I start looking to cash out too early on these trades, I've really hurt my risk to reward, right? Which is sitting at 2.65 here. If I'm taking everything at 1.3, well, every trade I lose at least 1R. That's why it's super, super important to always, always remember that you have to factor in fees. You don't just lose 1R, you lose like 1.2R, right? Not always, but by the time you work out the trade. So, that's where people can do it. And they can be like, well, hang on a minute, look, I'm winning trades here and I've got a system that's winning for me more than it's losing, but I'm not making any money, or I'm making very little money and I can't understand why. It's because you're often not factoring in fees, or you're closing positions out too early. Because when you're back testing, you're sitting here and you're like, yeah, I'd hold this, and you've got all the data and you can see price gets really close, but then runs down to here, and you convince yourself, I would have taken that, right? I would have held that. But if you're starting to close out too soon and at your internal targets and stuff like that, then unfortunately you're just going to hurt yourself overall. So right now I can sit here without any anxiety with as much money as I want on that position. I've taken my fees. If it goes from here, what do? We go back to the drawing board and we look again, right? Zoom right out. If you ever feel anxious about this, zoom out to your daily and say, okay, what are we looking for here? Our expectation here is that price has been closing above this level. We had our nice corrective move, which we played really well down to here. We've made our bread for the week. That's fine. 4R, you can afford to get. I don't think of it as four. You could take 4 losses with that, because again, with the fees and that, but it's borderline that kind of level, right? And that helps, then gives you the confidence to kind of say, okay, I'm trading now with conviction. We're very high in this move, right? So we've now kind of taken out this liquidity here. If this hasn't reversed it, right, then I'm not. I mean, I am interested in this order block because we have taken liquidity, but this was a much bigger sweep, and we do have some really, really key highs up here, right? So we've got this high, this high. Oh, can you guys still? I don't know whether trading views just paused again for the 900th time since they've done this Poxy update. Can you guys still hear me all right on the stream? I don't know if it's the stream that's gone down or if it's maybe just the chart. If it's not the stream, then, and I think, oh no, the stream has just completely frozen. That is weird. Oh, all my computers have frozen. Absolute. I mean, everything's frozen. Like literally everything. The stream to the tabs to the fucking notes. Oh no, okay, so my notes are back on now, but the stream has bollocks. I was just Oh, okay, brilliant. So it's fucking Chrome has crashed again. Thank you, darling. Fucking Chrome. Fucking people, right. Okay. I wonder if anyone's still there. Can you hear me, guys? I was just putting a little update on Twitter. Basically, it's Chrome actually just had a massive, massive crash. I can just see all your comments coming through now. I lost you guys for I don't know, about 3 or 4 minutes. Hopefully the charts and that should be back now. Hey, we've got patience. Yes, yes. Leave the tea and get something stronger. Do you know what, Hans? I think I bloody am at this rate, mate. I think I am. I think I'm about to crack open the single malt, to be honest. But if it's not TradingView seeming to mess around with me at the moment, it does seem to be something else. But we're back online. You did keep hearing me. Did you? Brilliant. So as I'm running around moaning off to everyone about Chrome crashing, brilliant. Hopefully, you didn't hear too many expletive deletives with children running around in the background. So we're back here, right? So let's just remember where we are. I'm back on. Do you know what? I didn't even have to do it. It just froze, crashed everything into oblivion, and then just reset itself. So we're current state of deliveries from this daily order block, right? So our expectation while we're holding this is for price to move higher. Okay, we've now got this key SR level here, right? Like we said, that also sits with this cluster of highs. For me, if this was a point the price was going to reverse, we would see this reversal coming down and probably quite aggressively. People would be closing out positions. People would start to position for shorts, and all this liquidity that's resting up here from all of these highs. Think of it as this big box of liquidity. Yeah, what are these? These are for people that are going short here. These are market buy orders. So what can big accounts, institutions come and do? They can kind of take it. The other side, yeah, Rudy, bloody good job I'm not trading, mate. I think that would have even made me nervous. Then I would have been thinking about, to be fair, what I do in that instance, I always have my account open on my phone and on my computer. I actually have 2 fiber optic lines running in as well, so that really shouldn't have happened. But it was Chrome that the crash was, not with the internet. So unfortunately, yeah, and it's professional as well, so paid for. But yeah, thankfully, I would have that on my phone as like a backup kill switch, basically. So this box here, which isn't representative of any size, it's just representative of people's stop losses that are sat above here. If smart money want to come in, as ICT would call it, or institutional sellers, right, then that breakout traders are going long here, right? Stop losses have been triggered from people that were short back here or short too early here. And then they can turn that in and they can take all of those orders, all of those buy orders, gobble them up from the other side with sell orders. And this is where you then see your big market reversals, right? Similar to like we got down here, we've taken out this key low. Yeah. So price is driving down into this. So ultimately, what have you done? You've taken out the stop losses of the people that were long under here. So people that were long under here, these are sell orders, right? Because it's a market sell order because you're going down the other way. What can big accounts do? They can look at that and go, thank goodness, because I really want to feel some big size here. Buy those all up, risk very little slippage, and then price can really look to moon. But you can see how when it digs in here, there's kind of a fairly immediate reaction. You'll hear a lot of people talk about these as like V-shaped recoveries. But when you see with this one, right, we've dug into it once, twice, 3, 4 times now. Doesn't really give you the indication that this thing wants to just absolutely drop. So when we zoom out, we pick our next highs, which is this one, and then this one, and we say, okay, if our expectation is for price to go higher, let's drop down onto our 5 minute quickly. See that we've been stopped out of our trade. But do you see what I mean? When you come up into here, as soon as you see these violated, right, you can start to say to yourself, right, actually, and this was a really key thing to watch as well. So this is showing a lot of strength, right? Because it hasn't retraced down into into discount for us, right? Deeper into this fair value gap. Doesn't mean that it won't. We need to remember that we're on a 5-minute chart. Nit, my man, how you doing? Not much, mate. You missed a fantastic crash on Chrome. We've just been looking at our anchor trade that we kind of TA'd up on Monday, executed Tuesday. We're now looking at what we're doing here. Exactly right. Hans, always our man, dropping the news updates. Don't forget about the news. It's going to be very, very hard today, I think, for the Fed to have any kind of hawkish stance, meaning bearish stance, right? They're also not going to want to be dovish, right, which is like bullish, because they're trying to calm the markets, right? So you're trying to curb inflation. You don't want, people to be running out with loads of free cash and the money printed to go on, which is, they've shown inevitable. But you want to be really, really, really Ryan, my man, any live trades? No, we're just looking at this one, mate. We didn't actually take this live, didn't fall within ourselves. What we were saying was this would have been the setup from this morning. This was the one that I was sharing with the group. This was our displacement, right? This was our high time frame level that we've run. We've now taken external liquidity here, which was the same with that. Our internal liquidity was this fair value gap, which was down in premium, where this green line is. So our expectation was for an internal sweep, external liquidity, down to internal, and to continue down here. Ultimately, we didn't get the deeper correction. When we got to our internal target here, we moved our stop loss to entry after taking something. We didn't actually do this. This is what we were talking through as it played out, but we would have moved our stop loss to entry after taking a little bit of money for fees, and then ultimately we got that reversal at that stage, and we're out for level, right? So we've not taken a loss, but we've not had a win. And the reason I was just saying to everyone, which I do think is important, is that realistically our actual target is kind of over here. So that's just the level that we want to be monitoring in terms of moving stops flat in case we're wrong. And this is where, as long as we have a good high time frame vision on the charts, it allows us to do the lower time frame execution. And that high time frame vision here, or executable vision, came in on our hourly. So the hourly said to us, okay, what have we done? Taken external liquidity here. The chances are the price is now coming back down to rebalance internal liquidity. So we wanted to see a bit of a deeper retracement here, but we need to also remember that we're counter trend trading this, right? So our counter trade, should always be managed with tighter risk, because ultimately we're going against the stream, and that is, you don't want to fade market structure, right? So we're clearly bullish. We're clearly bullish on a daily, massively bullish on a daily. So the trend is our friend until the end. All right? The trend is our friend until the end. But as Hans rightly does and always keeps us honest and reminds us of, we need to look at our news days as well, right? Very, very dangerous trading into these news days. What you'll often see are these big whipsaws, right? Where price comes up, takes liquidity on both sides of the market, and then actually settles in to take out its actual direction. So, enough rambling on about anchor. Let's see what we would have done. Continue those setups very quickly to finish off the session. Let's just take one last look. Or actually, are there any? I will take a quick look at B&B, and then we'll have time to cover one, maybe two other charts. So, whoever's first into the chat with them, or if a load of them flurry through them, we'll just pick the ones where there's most consistency. So let's take a very quick look at B&B. See what our thought process is there. Run ourselves back over what our expectations were, and let's see what's happened in terms of trading our plan. USD CAD, that's a great idea, mate. We'll absolutely do a bit of that. Let's do some USD CAD. I think it's always really nice as well. Really nice to kind of do those traditional market assets as well. So let's do that. We'll close off on that. We'll take a very quick look at B&B. What happened here? Again, what do we want to do? We want to zoom out first. We want to get our framing correct, right? Everything's framed around our daily here. So the reason we were looking for a corrective move down was this key order block here. Okay. Because you're all legends, we'll do USD CAD dot and DXY and see if we can finish that up in 10 minutes, So USD CAD dot plus DXY. DXY is so important, guys, as well, as H brings up here, because that's what we're using as our risk barometer very often. So this is what we drew up. This was a key order block. Why was this a key order block? Because we took liquidity above these highs, relative equal highs. We can then see as price broke down, it came in, retested it, which led to this big sell-off, right? So our theory is that when we really dig into this, we want to see some kind of reaction And ultimately, the reason that we're thinking about price correcting back down here is because we've also taken out these relative equal highs here, and because this has just been going up for quite a long time, right? So price, let's have a look. If we're really looking at this in here, price has been had this big expansion here. I mean, that doesn't really take a low there. I mean, it's that low. So realistically, if we're applying that logic, that our dealing range is made from, we have to allow for liquidity sweeps. That was our last liquidity sweep. We didn't set a low in here to be swept. Oh no, we did set this one. Sorry, we did set this one, didn't we? So that low there, which was swept, perfect. So that makes that our dealing range, which means that, it doesn't have to come all the way down here, especially if there's strength. But really, we want to see this fair value gap here, or certainly price come down here into discount. So it gives us a higher likelihood of high probability long setups. So let's just draw this back here, shall we? So it doesn't obtrude our view. We'll lock that for a second. So let's see how our theory played out there. Did it give us a good short setup? Also, as well, where's price looking to go from here? So if we're looking at this line being the equilibrium here, let's just put a horizontal on here so we can see that. And let's just say that's our expectation for price. Yeah. Now, does it mean that I want to jump into this now? No, not really. Just because when we're looking at this, we kind of got to say to ourselves, well, two things. One, we're quite low in this move down now. Yeah, if we're looking at this as our dealing range here to here, our opportunities for shorts were higher up. So this was yesterday. So yesterday's trading, let's take a look at what opportunities we had. So again, we draw out our dealing range. This low was taken down here to this high up here. Then we say to ourselves, okay, in our New York session here, AM or PM, what are we targeting? So we're looking for fair value gaps, right? We've got this order block up here as well, and also this FVG. So we're going to take our low-hanging fruit, which was the FVG here. Draw that in, lock it. So we can now pull this back, which is our range, dealing range. Leave that there, and we're saying to ourselves, okay, well, if we're targeting in here, as we said, we've got a high time frame target, which is lower down, right? So now we would be looking here, price has driven up into this New York PM session, I believe, might have just been just after, actually. But let's take a look at that. Maybe that kind of executed through Asia. It did. We just missed this one, actually. So we can see price was just digging down, digging down, digging down. We got our reversal here. Yeah, beautiful reversal. Like I said, when you see something like this, guys, really start training your eyes on seeing these on any time frame. But you get a sweep of liquidity. Then you get an inverse fair value gap, which becomes a balanced price range. Why is it a balanced price range? Because let me just zoom in for you. This inverse fair value gap here, that's inverted, but it's inverted with another fair value gap going through it, right? That's when we get a little bit excited and we say, okay, well, chances are we've run some lows, we've had all this downwards movement. Now we look for the corrective move higher. Ultimately, we get it into here. So we could have had a counter trend trade here in New York PM, although we wouldn't have got a chance to get involved, right? Because we would have needed to see that high taken out. Yeah. And then ultimately we just broke away from it too quickly. However, if you were dropping this onto the lower time frames, then you'll notice that you would have got an opportunity in here in this fair value gap to chase this high. I'm not really much of a chaser, and what I mean by that is if I'm not in the right side of premium discount and stuff like that, I very rarely chase these down. However, the market often gives you the opportunity, with this being the key level, that if that's our draw, then price very rarely just reverses in the middle of nowhere because there's just typically not the liquidity there for it to do so, not on any kind of grand scale. So price dug back down, right? What do we do? Took external liquidity here. Price comes back down to take internal liquidity. Our expectation is then we take external liquidity. Yeah, following along, guys. External liquidity, back to internal liquidity, back to external. Then what are we looking for here? I wouldn't have traded this personally because it's outside of my kill zones. It's also getting a bit late for me at this point. But remember what I said down here with what we were looking at? If we get to a position where we see, and actually you've got a couple of them in here, you see your inverse fair value gap. That happens after a sweep of liquidity. Yeah, there's your inverse fair value gap. Look how price digs back into that here before it starts to sell off. But ultimately, we have to wait for our shift in structure, which isn't until here. But ultimately, I think price, which I'm just going to take it from this low, which I'll realign to here, to this high. Price just doesn't quite come back up for us here. For it to be a high probability short, it digs into one of these earlier order blocks before selling off. And that, for me, in terms of when I'm looking at this, that's when the price action can get quite choppy. So that's looking at what we would have done. BPR. TFO. That's really interesting, man. That's a good thing. So Burns come up with a really good one on here. So you can get these great little indicators. TradingView, they're free. I assume this one's free, but actually I'll wait for Burns to confirm that. But there's others where you can just get ones that highlight your fair value gaps, highlight your balanced price ranges, right? And it's really, really good because while you're learning this, it just helps. It'll pick them out on the chart for you as they develop. And actually, some of my private mentoring students, it's really, really helped them over the sessions over the years, because when you then start seeing them, it's very difficult to unsee them, right? So brilliant. And Burns saying it is free as well. So take a look at that, guys. BPR, balanced price range by TFO. And that will give you really, really good insight to start, training your eye on those, because they're really, really good for reversals and points. And again, we can see as we step into this model, we've taken external liquidity. Here's our original consolidation. So we've got this market maker model now. Original consolidation, expansion, accumulation, expansion, reaccumulation, smart money reversal. What do we then look for? We can then look for these areas. So see these down close candles that were supporting price higher. Right? We then want to look at these and say to ourselves, that's them become resistance, right? This has become a mitigation block. These three candles aligned. Some people will take them from all of the wicks. Others will just align for the bodies if there's multiples. Again, I would suggest watching ICT's content on that. We all do it. Not everyone, but there's slightly different ways to do it. Or as we say in England, different ways to skin a cat. Another ridiculous British saying for you. So now we're below here and we start to violate this. What are we doing? We're now showing weakness here, meaning that the likelihood is we're searching out liquidity lower down. All right. So hopefully that's made sense and hasn't been too drivelly. What am I looking for on BNB now? Let's just zoom back out to our hourly. It's a bit choppy in here. I wouldn't be trading it with the news today anyway. But all I'm ever doing is just remembering to look at where we are, whatever time frame it is, internal to external, external to internal. At the moment, we're in a corrective move lower. Our up close candles are supporting price lower. So what are we looking for here? We're saying price took external liquidity down here, this low or this low, come back to internal liquidity here. So now from internal liquidity, I think there's an expectation for us to take external. So we come down, we take out this low, price then comes back into this fair value gap here, then come back down and take the low that it left there. We're now rebalancing in here within this fair value gap again. So we have to say, well, if we just take an external to internal, now I'd be looking for external to be taken. And actually, probably quite a nice little target down here in these equal lows. So let's do that. We'll write that up. Then when we come back onto this tomorrow, let's see how price behaves here. Again, I wouldn't be too keen to trade this at the moment moving into the news. So let's rip through a couple of others. So first of all, actually, I'm going to do the DXY because I just want to show people the significance that DXY has. Obviously massive when it comes to currency pairs. So if you see the dollar strong here, you would expect Euro USD, which you see here, to be weak, right? Or the US fronted pairs to be strong. So that's what we're going to kind of look at. Okay, so good question here from Nit, actually. Can you suggest other trade times outside of the kill zones? If for whatever reason you miss them or it didn't work out, I hope that makes sense. It makes perfect sense, mate. For me, and again, this will all be developed within your testing, but for me, it's really, really important. If I'm outside of my kill zones and I am respecting time and price, I know through testing those times that gives me my high probability setups. So if I step into the chart and I've missed a trade setup or it triggers just slightly after my trade time, I actually don't take them at all. I just step away from the charts. I say, okay, no problem, not today. And then I'll step back when everything's aligned. I know it just sounds like such a twattish answer to give, Nit, but I really, really mean it. If price and time don't align for me, the probability of the trades working reduces significantly, which again is not an assumption. It's just what I'm saying, just through my own testing. So what I would say in that respect is, if you're someone that's really struggling with time and price, then zoom out and go to a higher time frame, go to more swing trading, right? What that allows you to then do is really kind of get a control on it and say, okay, well, you don't need to worry about the kill zones then at all, right? So let's look at the DXY here. Well, if I'm trading this on an hourly chart, yeah, so this is our H1 chart. DXY, what have we done here? We've come down, well, we've taken external liquidity anyway, because we can see we've got this local low here. So let's just overlay exactly the same principles very, very quickly. It will help us kind of get a frame on where we are as well. So we've come down, taken external liquidity. I'm now not paying attention to these because I'm on a higher time frame. This hourly is now my execution time frame, meaning that I'm looking at the weekly and the daily for bias. Yeah, no, absolutely, mate. Yeah, just go back, really find the time frame you want to trade and what times you can bring to the charts, and then kind of build that system around that. But yeah, absolutely. What I would say as well is just go on to different currency pairs, or go on to different crypto pairs, or go on to equities and stuff like that as well, and then find the alignments on those time frames. But this is the same, right? If we were looking to execute on an hourly, what have we done? External liquidity. Where's our expectation for price to come to internal liquidity? Do we have any obvious internal liquidity in here? There's no fair value. There's a very small fair value gap here, which we violate here, meaning we expect price to move higher. So now, what have we done here? So price comes down, sweeps this low, comes back into this internal liquidity here, but we actually expect it to drive higher, probably into this order block anyway, just because this would be a little bit low in terms of our premium and discount, I believe. But let's not believe. Let's make sure we know. Yeah, actually, do you know what? Slips in there perfectly. So when we close above this here with this candle, that's beautiful significance that we're going higher. But then it doesn't change, right? External liquidity has been taken here. So we're now looking for price to move to internal liquidity. So that would be our long. Where would we target? Well, we want to look at price here. We really want to look for somewhere that has swept. Yeah, that's rebalanced. That's the last sweep here. So if I'm looking at this as our range, targeted on that one, by the way, just didn't drag it across quite far enough. Let me move that. There we go. So I'd be targeting the upper echelons of this fair value gap here, right? Meaning that I know where my risk is. I've had my market structure break, yeah, which in the move up has displacement. It's gone from external liquidity back to internal, which is here, yeah. And then what we would do is we would have our long setup triggered here, our risk below here. I always do a few points under, and then I'm targeting that up there. It's beautiful 4.8R trade. Can we see how with the longer term charts, obviously the higher time frame charts, like we're not using kill zones just because, although this actually does trigger in this kill zone, look, we had the displacement move over there. There's such small time frames when you're looking at this. So when you zoom out from here, you would then move to your daily. And then you're asking yourself, okay, well, actually, what's DXY doing here? I just immediately just think of SC when I see this, and just remember all the just countless hundreds, probably thousands of videos or sessions with him where deviation, question mark, where's your risk? If you're going long here, risk's under there. Where's your target? You're targeting these high. Just the way he does it, man, how he keeps it so succinct. But looking at our system, what are we saying here? Well, we're saying we've left the pen on, is what we're saying. So as we move over here, this for me, on a daily scale, right, what have we done? So we've taken external liquidity. Let's just get rid of that for a second. External liquidity taken here, right? We also came down below this order block here. That was significant for me because we see that supported price here, here. Then when we close through it here, again, what would we then do? Well, the down close candles that are supposed to support price, which we've got proof of here, fail to do so. Then the chances is this becomes a mitigation block. And actually, we're then looking for the arrays within here that we can short. And that's this fair value gap. Yeah, can you guys see that all right? Yeah, so down here, comes back up. We're still within this, yeah? So if we're going from external to internal, then I'm looking at this low down here, if price reverses, to bring the DXY lower, right? However, if this candle, this daily candle here, closes above this, then and above this fair value gap, sorry, then my expectation is for the dollar to drive higher. I did expect the dollar to be a bit more bullish, to be honest. And again, we're in the middle of news events, right? So we can't pay too much weight on that. But for me, that's what I'm looking at the dollar at the moment, right? Um, and if this shows more weakness, then risk is going to have an absolute party. And by that, I mean, if the dollar's weak, our risk assets typically do quite well. They're things like your S&P 500, the NASDAQ, but also cryptocurrency kind of piggybacks off of that. It's not always the case, right? It's not always the case. But for example, as we saw here, this huge run up from July all the way through, if you put that, if you split some charts, and you can kind of overlay using this tool as well, it doesn't always work the best. So something you can do is just go to your screen layout, go to a split screen layout here, get your DXY daily on here, and then we get this one here. Just while that loads, TradingView just being a twat again. But you can see in this, right, guys, I'll actually just make sure that it isn't the stream that's frozen again. Bear with me. So when we're looking at that in terms of strength, we're putting those screens side by side so that we can sit and monitor the strength that we're seeing in DXY and see. Oh, hang on, the thingy is just. Anyway, TradingView is just wigging out there. So it stuck us back on the DXY chart. Let me just re-add this very quickly just so we can finish up the 7. Yeah, I do, I do allow for SMT divergence as well. Not something that I really put out on here, and it's not something that I abide by all my systems either. I typically put that before. I don't put that before my high time frame bias and obviously my trigger mechanisms. But if you do get SMT divergence, smart money divergence is what H is talking about here. Which is where you have divergence between, you typically in equity markets, you compare the NASDAQ, the NASDAQ, S&P 500 and the Dow Jones index. And what you're looking for is you're looking for the one that's showing the most strength. So basically you would see, say, for example, 2 of the charts would have swept liquidity and 1 of them wouldn't have done, right? And then you're looking for that divergence to give you a little bit of extra zhuzh and kind of say, okay, what is that coming in? And there's actually, someone sent me this to test the other day. Which is SMT divergence, which we'll take a quick look at that actually. It's just a free indicator you can use. And we'll look at that in another session actually. I won't overcomplicate this. But basically on the DXY, what I'll say is go and get your screens up. TradingView's been a little bit twitchy since this latest update. But go and put your comparable screens on. Yeah, you can look at them side by side. And then the idea is, let me just try it again actually. I really want to show you guys that. Just everybody I know that's been using TradingView lately has just been saying how badly it's been struggling since this latest update. So I do hope they fix it because their support is awful. But I can see that on there, guys. Even though this thing is just for whatever reason just freezing up, what we're going to be looking for are counter correlation between the two. I don't think it's going to let us play ball today for some reason. Oh no! Oh, there you go. Always say that. And then you get yourself a little bit of creating your own luck. So where do we want to look for here? We want to look in July, right? Which is when we were looking at this chart and we were saying that we had that nice big run up. Yeah, so around about mid-July, I think. So 15th, let's just put a vertical line on here so we can see that. Yeah, do you know what? I really should do. I know people say about it. It's just from a teaching perspective, it's really, really difficult. Not really difficult, but sometimes it's nice to have different tabs open. You can pre-prepare sessions, charts, review other charts and bits and pieces, but I really should use it. I was so unlucky with it in the early stages when I started with the Nest using the app that I just moved over to the browser. But you're right. In fact, what I'm going to do, Bernd, is I'm going to go and check that out. Also, Bernd, thank you very much for your advice. So yeah, check out IDR ranges. Yeah, so data ranges, basically. And yeah, Master is very good with those as well. See if that helps out. Similar kind of principles, and always good to kind of build that side out. So 14th of July. 14th of July, right? And then where did we really start topping out here? It was around about October, wasn't it? Well, not topping out, but that's when we really started to come to a close. So let's just say that was the 3rd of October. Yeah, so we can see from here, just to keep that accurate, while the DXY was bullish, Bitcoin was technically bearish. Again, we had this kind of chop at the bottom. It's not a perfect correlation, right? But the idea is that really we're using this as a barometer for the market's appetite for risk. Yeah. So while the dollar is kind of seen as a flight to safety, and I know you'll read a lot of stuff about how that's all changing now and blah blah blah, it will take a long time to dethrone the dollar. Believe me. All the chat about the petrodollar and bits and pieces, don't we? Yeah. Sorry, Julian. This one has run on really so much longer than I thought it would. A few technical issues on my end, so I do appreciate it. But thank you so much for joining in again, mate. I'm going to be live again tomorrow to close out the week if you are around. So let's just get rid of this anyway for a second, because I did promise that we would take a quick look at DOT and USD CAD, right? So let's just do a quick 5 minutes, see if we can rip through those. My position at the moment on dollar is more weakness here. Unless we inverse this fair value gap, we need to close above this. If we inverse this, I think the dollar's probably going to show some more strength. Remember, we need to wait for that daily close, though, right? So at the moment, we have to respect our market structure. And what we've done is we've taken liquidity from the highs. We failed to rebalance in here, showing weakness, right? We've now taken out our external liquidity. We're looking for internal liquidity, which is here, from internal back to external. If we close above this, then we're searching for the external higher up here, all right? So, let's get on old USD CAD for our friend Hans. This pair used to really kick my ass, actually, Hans. I'm not going to lie to you. It used to really, really kick my ass. Where are we? You see how long I've been doing this with this pair. But yeah, anyway, it is a really, really great pair to trade. It's just, I think it was just something that I just went through this massive period of drawdown with and just really had to soldier through. And I think I just ended up giving me some like PTSD or something, because I didn't go back to it for ages. Let's get rid of that as well. There we go. So often with yeah. Geo, sorry, mate, I missed that. On the weekly DXY trade, it looks like it's a deviation. The range high from March is now back inside, and back testing the higher. I guess it's decision time, back to the EQ or back 100%, mate. How you can see that is brilliant. You just see that range set up. Our expectation is when we're trading any range is if we sweep liquidity on the highs, come back within the range, our expectation is for price to search out liquidity of the lows of the range via the EQ. Yes, I'm glad I'm not the only one. This thing's just been ruining me. It absolutely killed me for so long. But let's look at our principles. And guys, I'm just going to focus on these quite quickly now, right? Just so that we can get through this and not make this too long. We've got this high here, we've got this high here, right? So we've taken external liquidity on a weekly basis, right? Our expectation then is for price to come back down for internal liquidity. We swept this low here, meaning that this is our dealing range. So we're actually right now holding this, we're back down within this order block on a weekly scale, right? So external to internal, right? Actually, we can see the reaction that we had here, which is this week, the starting this week. We just dipped down into discount, enough for us to hold this order block. And also, we inverse this fair value gap again. I know I go on about them. Doesn't matter the time frame you're on. These things are really powerful indication that we're searching higher. So that's good. So we would have been bullish starting this week. Let's see how that's worked out for us as we move to the daily. So let's remember our weekly bias is that we are bullish. All right. So where were we here? Monday. Really nice start. Brilliant. Again, what are we overlaying here, guys? What have we just done? We've taken external liquidity. Where's our expectation now that price is going to seek at least internal liquidity here? Right? And that's just in the form of this. So our first two trading days, we would have been long up to here. Let's drag this back to here so that we've got it for a point of reference as we dip down. Right now, again, we can come right up into this and then look to sell off lower. But we do also need to remember that our bias is bullish. So if we start violating these, we won't know until up here, right? But then the expectation would be to push higher. But around here on a daily scale, I'm going to be a little bit cautious because we are within this daily FVG. This daily FVG is also in premium, right? So it means that we favor short setups. We're going to now drop down to our hourly. How did it work out for us trading Monday and Tuesday? Lovely trades on Monday. Tuesday was maybe a little bit higher, but look what we had here. We had this reversal. What did we do? Swept external liquidity, so we were now targeting internal liquidity up here. So that then took off here, which is beautiful because, again, we can see this, respecting this order block, that would have given us a good base to frame our trades higher. As we came into Tuesday, right, we'd already had the run, so we would have had to be trading this in London. I do really like trading currency pairs in London. You know, when you overlay these, you see how many significant key moves you have triggering the London sessions, right? Same with this one here. So today, as for right now, I'm actually thinking, well, short-term kind of bias, obviously our overall bias is that we're bullish, right? But when we're looking at this here, we see we've had this huge expansive move higher, and now we're up in, you know, the premium part of our range. What's the likelihood that we're going to get this corrective move lower? So what we need to look at here is saying to ourselves, okay, we took external liquidity here, we moved back up, we took external liquidity here, and we came back down to internal liquidity. External liquidity back to internal. Well, what are we doing now? We're now sweeping external liquidity up here. So we get a strong close above this. I think it's quite possible we hold this and push up, you know, potentially fueled by some positive news. If not, then, you know, if we're looking at this external taken here, this is our dealing range because that was the last low to be swept. So we would take that up to where price currently is. So we would just look for a lower time frame corrective move back down into here, but very, very difficult to fade this at the moment. Dollar's looking strong. Obviously, you know, against any other pairs, that's going to be pretty aggressive. So yeah, that's what my thoughts are there on that. Hopefully that's been clear. Hans, I'm sure you've got a very good read on it as well, my friend. And one more I said was dot, wasn't it? That wick. You're very welcome, mate. I know you've got a beautiful read on these, on some of these pairs, Hans. Always sending me some interesting levels. Yeah, I'm just looking at that 1.38. I think that's going to be a really interesting level. Okay, so where are we on dot? Dot, we took external here. Yeah. We then had our correction back down. We didn't actually come that low in here if we're considering this as our dealing range. And I'm talking about, sorry, when we took this high here. Yeah, so when we set this high here, dealing range was set. Did we sweep that? We did. Price came back down into here, just slightly higher for us here, right? But that was the internal liquidity. We've now pushed up to here, taken external liquidity here. So then when we pushed that up, price corrected back down, again held this OB, right? Remember, like we're saying, we're expecting these down close candles here to support price. We can see what happened. Price dug into this and then it's gone higher. So if we've now gone from internal liquidity, yeah, so external back to internal, yeah. So now we're pushing up higher. Where's our next external? We need to look over here to the left. And I think we're looking at this. To have this one here, which is probably a little bit more clear and obvious, right? So now let's drop down to our hourly quickly. We can see where price engaged with this. So what have we done here? We've taken external liquidity in the form of that and also that. We're then looking at our dealing range here, which is that low that took from that high. Price is now coming back down. Our expectation is probably for this order block, because we haven't closed this FVG yet. We need to wait for this candle to close before we do that. If our expectation is for higher prices, then we'd be looking for long setups from here. If, however, we inverse this order block, yeah, I'd then be looking on a lower time frame chart for us to probably come down and start interacting with these equal lows down here. All right, guys. Look, sorry for the kind of rush to the end of the session. I know it's been a really, really long one for people. I can't believe how many of you have soldiered all the way through that, especially considering Chrome kicked us out for about 5-10 minutes as well. We've got the Congress event coming up. In fact, I'm just about to go and dive into another meeting about that with Burb and the crew and just confirm all the exciting things we got. We've got speakers coming from all over the world. We've got crazy amounts in prize giveaways. We've got live trading sessions going on, everything like that. Do make sure that you're registered for it if you are interested in it. It's completely free. Not some kind of scheme either where we're going to try and keep you on an up bill and charge you and stuff like that. We don't want anybody in the nest unless you really want to be there, right? And you really want to learn. And yeah, it just needs to be beneficial for everyone. At the end of the day, all the trading team in there give up our time, as does Burb, because it's been something that's been, really, really helpful for us in our lives. But thank you all so much. Do you know what? So many legends on this stream today, and really do appreciate every one of you. It's been really great being live with you every day, guys. We're going to go back, we're going to review these charts again tomorrow, take a look at them. But thank you so much, as always, for giving me your time. It's really, really is a pleasure to be here with you. Going to be here with you again tomorrow. And yeah, I'll need to confirm the time though tomorrow that I'm going to be live, but I will be back with you tomorrow. We're going to take a look at these trades. Until then, do keep one eye on the news events, right? Don't get caught in the whipsaw. Trade safe, and if you've got any questions, don't hesitate to reach out, all right? You can find me either through the nest, you can come in on a free trial, you can register for Congress, or you can reach out to me on Twitter as well. All right, guys, have a fantastic rest of the day, and I look forward to seeing you guys tomorrow.